on the markets now. We have Sampath Reddy with us, CIO of Bajaj Allianz Life, to discuss the way forward to the market, some sectors that he likes as well. Mr. Reddy, thanks a lot for joining us. This is Pavitra. I don't know if you were able to listen into the last conversation. We were talking about a lot of the tech earnings that have come through. How do you look at this space now? You know, so far we have seen a few positive surprises from the mid-cap tech space, but there is definitely pressure in a lot of the larger names. How do you look at this entire space? And do you think after valuations correcting a fair bit, it now seems okay for an investment, or would you still stay away completely?
Right. I think the IT services as a sector, as I would say, for the Q4, have disappointed in terms of earnings. In fact, the disappointment was there both in terms of top line revenue growth and as well as the margin side. They have been facing the cost pressures at the same time. Demand was also not very encouraging. I think that was a sort of a disappointment for the for the overall quarter as such. But even though, in spite of the IT sector disappointment, I would say the Q4 earnings are still likely to be pretty much in line with the expectations in terms of aggregate earnings growth wise. But IT sector has disappointed. I think overall, if you see there are headwinds in terms of demand growth wise, especially with the interest rates moving up substantially in the US market. There seems to be a pressure on the demand side, and also BFSI is one of the biggest sector for the IT spend in terms of IT spends wise. That sector is also seeing quite a bit of headwinds, especially if you see several of the smaller banks are actually going through quite a bit of, I would say, the distress in terms of the more so driven by the ALM side of mismatches. Because of all of these reasons, I think overall the growth, IT spending growth is a little bit of expectation wise got downgraded, but the stocks have already corrected substantially. I think in spite of these headwinds in the US geography, IT sector is still likely to deliver about 8 to 10% earnings growth FY24. This is slightly below the Nifty earnings growth estimates of about 12%. But I think given the stocks have corrected, maybe I think they are giving a slight opportunity to buy into the market, buy into the stock sector.
You don't expect any PE derating in the IT companies, at least in FY24, because the earnings growth rates have fallen off? Or do you think the worst of the PE derating is behind now?
I think there has already been some amount of PE derating has already happened, and if you see the overall earnings deceleration, it's about 2 to 3 percentage point from earlier expectation of about 12%. Now earnings are cut to about 10%. I think at this level, given that overall earnings growth for the Nifty itself is around 12% for the next financial year, the IT sector is still going to deliver a decent earnings number in terms of growth wise. So may not see a significant derating from here on, I would think so.
Okay. There are some pockets within this market that are really doing well, right? Even when on an index level, it looks quite flat, such as the railway-related stocks, some of the defense names as well. Are these pockets that you would be interested in looking at, names like RVNL, Ircon, Railtel? Are these names that have your attention?
Right. I think overall capital goods sector as such has been doing quite well, and partly driven by the government spending, especially on the defense side of the spending, and also you are seeing a good amount of capital spending by the railway sector and also the urban infrastructure. And not only this government-related spending, but also the PLI measures which we have taken in the last 2 years. That is also leading to the good amount of capital spending. All of that is actually leading to the good order inflows for the capital goods sector, and earnings growth is also coming good for the capital goods sector. I think the sector overall we like that, and especially in that in the capital goods sector we like more of most of these multinational subsidiaries which have got listed here. We've been liking those kind of companies, and we continue to own such a large number of those names.
I know you won't talk on individual and specific stocks, but how should someone approach the fall that we've seen or the performance of a company like, say, Laurus Laboratories? Q4 has been weak, but the stock has already corrected 50% in the last 1 year. And the company's guidance is that things will eventually improve once this period of consolidation comes to an end. So what's the general approach in these pharmaceutical names when we do see a big earnings miss, if it happens for more companies? What's the thought process?
Right. Yeah, I mean, I will not really go into the details of the Loris numbers, but if you see overall as a pharmaceutical sector as such, they've been facing some sort of headwinds in the US geography, especially in terms of the pricing side of the pressure. I think large part of that is now behind. We are, in terms of exports wise, domestic pharma continues to do well, but from export side of the story, it's just beginning to bottoming out, I would think. So overall, the US generic export oriented companies, beginning to show good recovery. I think that's a sector we look as a turnaround bet in the overall market.
Okay, that point is well taken. Another space I want to ask you about is this entire real estate index, right? We've seen quite a move higher on a lot of those names, but it's very divided because you have the luxury space doing really well, perhaps, while the affordable segment is not quite there yet. Is this a good investment opportunity in your opinion?
Real estate, as an asset
and
class.
And the stocks.
Yeah, as an asset class, in generally, given a good returns for the investors over a long period of time, but that I would think is more as a, the physical asset. The experience, at least, I would think in the stock market side of the listed companies as such, not sure, they've generated a big amount of wealth for the investors. So we're not really, on top of the sector, and I don't think we have any of the exposure to the real estate sector in this juncture. But of late we've been tracking the sector, but we understand that the urban side of the consumption still continues to be good, and especially more so on the luxury segment. That companies exposed to the top end of the luxury market, I think they're continuing to show good performance.
Okay, that's some view coming through on the markets and the way forward. Thank you very much, Mr. Reddy, for joining in. Numbers coming in from